All right, this video is for people in the real estate trader business, and you also qualify for real estate professional status. So usually the first step is you're generating a lot of income. You probably are a single member LLC, and usually the first step, if you make pretty decent income, let's just pretend it's $250,000. You usually want to convert yourself to an S corporation, and some caveats are you have to make sure you have to pay yourself payroll, which is going to be additional cost. You have to pay yourself a reasonable compensation, whatever that amount is, based off of how many hours you work, what your skill level is, if you have employees. And in this scenario, I'm just pretending that reasonable compensation would be 80 grand. And so you make 250 grand, and this is just comparison. 250 grand as a single member LLC, you report all your income on your personal taxes. If you have an S corporation, you'll have payroll. This is your wage right here, which we are deeming this to be reasonable compensation. The remainder of it is going to be S corporation business income, which isn't subject to self-employment taxes. And if you go down, this paycheck 80 grand is going to be hit with about 12 grand of payroll taxes, which is the same as self-employment tax. Well, not the same, but Social Security and Medicare. And on the other side, the full $250,000 is subject to self-employment taxes. You already see the difference right there. You're paying $15,000 less in Social Security and Medicare taxes. However, you will pay a little bit more in income tax right here, but the net of it is that you are going to be paying about $10,000 less in taxes. However, there are additional costs associated with it, such as an additional business tax return. You also have to pay for payroll. So these are just rough numbers estimates. So the net, even with additional after costs, is going to be $8,000 roughly in tax savings. So that's usually the first step when I talk with real estate agents or flippers or people in the real estate business. And I have a client that wants to not pay any taxes by getting rental property and materially participating in it and qualifying for real estate professional status. That's great. But here's the problem. If you're still generating income from your real estate business, such as an agent, whether you are a single member LLC or an S corporation, and hypothetically you wipe out all of that income with rental losses, should have been rental losses. You're not going to have any income, and so therefore you don't have any income tax, which sounds great. However, you still have to pay the self-employment tax or the payroll taxes associated with this salary. We're going to make this 80 grand. So even if you have rental losses that eliminate all your income, you don't have to pay income taxes, you still have to pay for the Social Security and Medicare taxes. Now, a step above that is if you only have rental income and you don't have a wage or generate any self-employment income. And so if you had 250 grand in rental income, you still have to pay about $39,000 in taxes. However, if you can generate rental losses and can wipe out that rental income, oops, I guess it still works, but no income, therefore no income tax, and also you don't have any self-employment or payroll taxes to pay. So this is usually for the people, this is the ultimate goal, is to generate income from your rental properties, still cash flowing, and then wiping it out with maybe a cost segregation study, regular depreciation. And so hopefully this helps my client understand going from a real estate agent to a real estate investor and how you can avoid paying taxes.